Good morning, this is Anne Marie. This is the extended SPY report for June the 6th, Thursday, June the 6th. Taking a look very quickly at what we've got going on. Let's inch this up. Do you see this gap right here? It's the gap from the beginning of May. And really what we are very likely to do is fill it. Very, very likely to fill it. Let's take a look at the 4-hour chart so that we can see where these moving averages are sitting, what kind of suction events we're looking at. The rule of thumb is that if we breach the 50, we should run down into the 200, which is support level 3. Now, support level 3 here doesn't quite coincide with very much. Seems like it might be this region, which is about the midline between support level 2 and support level 3. And so let's borrow this. We won't be seeing that for a bit. And place that price point right there. 159.66. That's what I am expecting the target is going to be. And then perhaps it lollygags around here until the 200 comes up into the region. As I mentioned, I felt like this rejection here day before yesterday was very bearish, and indeed yesterday we just ran straight down. So if we come back to the chart, wait 1 second. Yeah, everything is still showing downside momentum for sure on the 4-hour. 1-hour chart does show a little bit less price action that looks negative, but still very downward sloping, just a little flattening here. Please notice that when the SMI gets into this region, it does have a tendency to bounce a bit, so we want to be watching and cautious of that. What do I expect? A press up into resistance, 162.20, and then a failure with the ultimate test somewhere around 159.66. Easily we come into this space, but my thought is rather than fall through the gap, we will come to close it. Very negative action still all the way across. So we need to be expecting that that's going to be the order of the game. Now, right now, the pre-market is popping, which is what we want to see. We want to see a pop, and that pop needs to come into resistance. And that resistance event, which incidentally is halfway between S1 and S2, but it is really just the top of that wick, the 162.20 is going to run down, and we'll be able to see further downside action. So ultimately, the best short you can have is the rejection of the 162.20 area, or you can trade into the gap with the 161.02. Just be careful, 30-40 cents to the south. Buyers are going to try to start getting in, particularly at this S3 event. Now, the pivot action is going to continue to drift down. If you notice from the blog post, you'll see that this number keeps getting lower and lower every day. So the pivot keeps drifting down. That means more price action to the south. These guys are getting ready to cross. You know, that again, not pretty for upside momentum. So we could be in the middle of our breath that we need to take. Just watch those levels. Easy, pretty straightforward trading, as it were. Now, this one, that one is through its May gap, the first May gap, and here is the second one. Now the IWM, remember about a week and a half ago I said, wow, this IWM is way stronger than the others, but it could mean that it just has farther to fall and will do it in a longer period of time. And that really has proven out to be what it is that's happening. Well, we've got S2 right there, so I don't need to put a price point there, but I can put one right there where that relative noise is. And then I can borrow this one also and put it at the base of the gap. So that's what we'll be looking at. Let's think about what the price action looks like here. We're sitting underneath everything on the hourly chart. Let's check that 4-hour chart to see where we are in relation to the 50 and the 200. Also just halfway, not even halfway. Halfway point looks like right here. This is a suction event if I've ever seen one. So the pops that we have today will be into resistance more than likely. The loss of 97 will be another short. If you took the loss of 97, holding it overnight, not a bad idea. Let's expand this a little bit. That's just a waste of time. Yeah, and so, that's what we're going to be looking for. The pop up, loss of 97, going to be a short. Other than that, the loss of the low, 96.14, is also going to be a short, and that one is going to be for maybe 30, 40 cents or so. 40 is kind of a stretch. But if it loses the level, it's going to come into this region. All in all, I suspect here's where it's going to come. And indeed, because of where the gap event is, it's going to fill this. All the action seems negative. All the action seems extremely negative. Most definitely. Everything's running downward, though, do you see how it's flattening here? We could also have just a really kind of a choppy day that bounces up and down in between these ranges. If we pop up into this 97.10 to 97.20 area and we fail it, we can immediately take the short below the 97. I mean, you could take it at the loss of 97.20. You just have a tendency to maybe be blindsided by buyers that are sitting here. But once the buyers are gone, and that will be below this 97 region, we can pick the trade up and trade in between the levels for quite a bit of movement. Right? Yesterday we moved a lot. So there's quite a bit of movement in here to recapture from. If we bounce up into the region, it will be very, very nice for the failure to give us a short. We can also say, hey, listen, if I recover, and you can look at this, you'll need to look at it on a 15-minute time frame, because the price action will look quite different. If you see this happening and this inflects on a 15-minute time frame, you know that you can take the counter trend long into this rejection region. Is it the more dangerous trade? Absolutely. Not really a trade I like to take, but I do know a lot of people that like to take that reversal trade back up into some kind of major moving average. And that is the possibility. Let's take a look at the Qs. Once again, Qs surprised me. They just it's right there at the base of the gap, looking a lot like the SPY, doesn't it? Don't you think? Looking a lot like the SPY right there. This also very negative. Downside momentum. If we pop, this was a nice level. Look at how nice that hold. Complete rejection of that 72.43 to end on the relative lows of the day. Not pretty, right? So we do expect pops to fade. Really, we do. So watch for the pop. Look at it come into resistance. If it loses the level, you can take the short back down into the congestion region of 72. Be very careful hanging on to trades. For instance, if you see this, it fails S2, comes down into this region, holds, and then breaches our 72.43, not a good place to stay short. Right? Because the next place is 72.71, and the next place is up here. So we really don't want to do that. Okay? We really do not want to do that at all. So just be careful. By the same token, if you decide, hey, listen, I want to take a long off this bounce, and it comes in above 72.15, you take the long, and it comes to 72.43, but fails, don't stay in a long time. You know, if it loses that 72 level, 71.97, you know it's probably heading down into the gap event. Look at this. I'm going to borrow this line. Gap event down here. Very, very important, 729. Ultimately, I think that's probably where we're headed to fill the gap. But the midline of the gap at S3, where a lot of charts really are met with buyers, sits in the middle of that gap. So, what did we actually do also? This is the midline between S2 and S3. Always that 50% event. So let's see what happens. If it loses that region, pretty strong likelihood that we're headed to the middle of the gap. All right? Good luck trading today.